another video from Creativo Solutions. You're currently watching the Finance for Non-Financial Managers video series. If you have any comments or questions, please post them below and consider subscribing to this channel and you'll be the first to find out when new videos are uploaded. Visit the website for more content and resources, and consider following us on Instagram and Twitter, and keep watching the YouTube channel for more support. In one of our previous videos, we spoke about the different forms of ownership. One of the forms of ownership is a company, and companies can either be private or public, depending on who can purchase shares or equity in that particular company. So we know businesses can start out as sole proprietors or partnerships, and they can obviously become bigger and they can then convert into a company. The company represents a separate legal entity, and that's why a company would be established, because the company would be able to continue indefinitely. So a sole proprietor could create a partnership, and that partnership would operate. The partnership would focus on creating value, and over time that partnership should grow. At some point in time, the partnership may want to choose to become a company or a corporation, which is a much larger entity. Those entities are separate, so they would then run as a separate juristic person. So businesses become separate legal entities and they operate indefinitely as a juristic person. They have legal capacity to transact, and those companies can exist forever so long as they continue to operate. We also looked at the financial markets in one of the previous videos, and we spoke about the financial market as being an exchange whereby we can exchange goods and services. So the market is a meeting place for buyers and sellers. If we're going to be focusing on the primary market, well, the primary market is going to be looking at when the business first lists on an exchange. A company which is seen as being private can convert into a public company by listing on an exchange. Or we could have a business like a sole proprietor or partnership choosing to list its shares on a particular market. And if that's the case, we'll then consider raising capital in the market. We know one of the biggest advantages for growing the business is having access to different forms of capital. So as a sole proprietor and a partnership, there's limited access to capital, but as a company listing its shares, which represent the equity in that business, on an exchange can help the company raise a lot more capital. So when looking at the actual primary market, we're focusing on the intermediary's role, whereby they're assisting the business in raising capital. Businesses need capital to continue to expand, so the financial intermediaries will assist those companies with raising more capital. Having more investors provide the company with more capital. So when the company lists on an exchange for the first time, we call that an IPO. That stands for an initial public offering. Companies can raise more capital on an international stock exchange because shareholders or investors anywhere in the world would be able to access those instruments. Those products will be bought and sold on an exchange, and the exchange is normally regulated, which provides peace of mind when transacting, because we can trust the providers of those instruments. Equity is generally what we're going to be looking at here when making a purchase of a stake in a particular company. So we've established what the purpose is of a market. A market is a meeting place for buyers and sellers. So if I'm looking at a company, what is the company selling? Well, they're selling shares or equity in that particular business. And the market, the investors, they will be buying those instruments. And that's why we have an exchange. And the exchange is regulated to ensure that the market is fair and the willing buyer and willing seller are getting the price which the market is currently setting. We know intermediaries play a very important role. Those investment bankers and underwriters are going to consider what the risk and the return is. They're going to be helping to create interest in that particular company's equity. When new companies list on an exchange, no one knows those new companies unless they've built up a reputation. So public companies such as Facebook and Twitter, prior to them listing on an exchange, were very popular. Many of us were using those platforms, and therefore we have an idea of what the products are. We don't know how much the equity is worth, and that's where the investment bankers come in and the underwriters come in when that particular company actually chooses to raise equity in the market. So when Facebook and Twitter eventually listed on the actual exchange where they're selling their equity to any investor, there needs to be some sort of valuation that takes place. So when focusing on access to capital, yes, large companies will have access to capital, but it all depends on that company's reputation. And when the investors are choosing to purchase equity in that business, they need to look at the actual company and they need to determine valuations. How valuable is this specific company? Obviously, if we consider the company to be worth more than one of its competitors, we would expect to issue those shares at a slightly higher price. So buying stock in a particular company, a share of the company then be priced at a specific level. So due diligence and a perspective would be part of that process, whereby we need to establish what the actual company is worth. We need to do homework in terms of research, and we need to get enough information in order to make an estimate of the company's value. So always remember that the primary market is when companies first list on an exchange. Financial intermediaries are key to help with the actual listing, and the financial market is just a meeting place for buyers and sellers. So the primary market is when the transactions take place for the first time. This concludes this video. Thank you for watching, and please consider subscribing to the channel to keep updated with new videos. Please post any comments or questions below, and if you like the video, please hit the thumbs up button and we'll continue to make more to help you.